And I just want to explain a couple of possible wave counts here. And the first one is that the wave 5 here is completed, and that's the 5 waves that we were looking for to the upside here on the US 30. We were expecting this to come somewhat higher in terms of the same length as wave 1 here, coming up through here. Now this price action through here as wave 5 here, it does count, it's possible to count it as such, and some markets like the S&P 500 are a little bit easier, or the Russell or the Wiltshire 5000, they've kind of got a better wave count through here. But at the end of the day, we can count that as a wave 5 completed there. That's one way to look at it, and if that's the case, then we'll be moving down from that. The other scenario is that this is a wave 4 here and we don't have wave 5 in just yet, and this would be an ABC correction from here in terms of an A wave here, a B wave to here, and then 5 waves in the C wave to here, and that's completed there, and then we'll be looking for 5 waves up through here. So that's one possibility from there, and we'll be monitoring this situation through here. But the other markets are suggesting that that a top is in play when we look at the FTSE and so forth. So we need to be very mindful of both situations here. So if this was going to come further down through here, because we've got this 5 waves here, this 5 waves here can be wave C, or it can be wave 1. So just coming into the smaller view here, so we've pretty much got a nice clear 5 wave structure coming down through here in terms of the 1, the 2, the 3, the 4, and the 5. We can go over that again. So once we do get 5 waves, if we get 5 waves in a different direction, if we're going to call this wave 1 here, then we'll be looking for an A and a B and a C wave through to here. Now this normally in a textbook would pull back up 50-60% of this move coming down through here, but it's much better if we just count the structure as it moves up through here, because this first leg here would be 5 waves, 3 waves, and 5 waves, and then we can look to short it from that point there. So this would be bearish if this top here got taken out through here. That would be the trigger for that there, because if we're looking for 5 waves up, 2 would be looking for this wave here to stay above the top of this one here and move up from that point. But if it moves down lower through here and takes this low out through here, then that's the trigger that we know then that it's bearish. That's the, that's the cutoff point for that. So this monitoring this situation up here becomes extremely important of what this structure is here and how we set up for the short trade or the long trade. So on a 5-minute chart here, the current low at the moment for the Dow, and this will be the same for the other markets as well, you can quite clearly see here that we've got a 5-wave structure here. So this would be just the A wave. So we've got the 1, the 2, the 3, the 4, and the 5 here. So this would be a little A, B, and C here for this wave, for this here. Then if this is just the A wave here, this would be the B wave, and then the C wave would be up through here. Now normally the C wave would be the same as the A wave in terms of length. However, it really depends on what numbers the market's been going through, and we can see that in this whole area through here, this 15,500 would have the most orders there, so it can skew the wave count. But at the same time, we would be looking for a 5-wave structure to the upside. So we could look into this area through here for that ABC move there. Also too, if we've got the 15,500 here, then 10, 20, and 30, this would be an important part here, this level here, the top of subgroup 1. So support on top of that would create the long trades from that point there. Otherwise, we should expect this to fail within this area through here. And the short trade setup would be, once we've got that, that's the top there for this one here. So if we get this up through here and we come back in here as such, it'll bounce back off the 15.5 here, retesting supply here, then it would move down from that point there. So you could look for your short trades all through this little area in here. And yeah, build it in there and keep the stops up there. That's how that would work to the short side, and that's how that would work to the long side. On the S&P 500, it's the same again as well. Same sort of story. We've got a nice clear 5-wave structure down through here. So that means that we would be looking for the same thing again in terms of an A and a B and a C coming in here, retesting anywhere from 1695 to the 17 here. Obviously the supply 1 is in here where it is now, so to speak, and supply 2 is up here, but we need to take in the consideration of this particular number here because it will attract the most orders. Once again, we can look at this as a, well, I've got it as a triangle here as a wave 4 over to here, but just for the purposes of the bullish market, the A wave, the B wave, and the C wave there, so a little A, B, C there, and then the C wave to here, and then we move straight up from here. So it will really depend if we get 5 waves up here or just these 3 waves here, and the bias is for a bearish move through this area through here. So that's let's have a little closer look at that there. So if it was going to be bearish, well, let's just say that if it was going to be bullish, you would want support on the 1700 there. Okay, so the bearish move here would be playing out like this here. The A wave is just about complete. The B wave will be on its way. The C wave will be here. Then wave 1 into the 1690, wave 2 here, the wave 3, the 4 and the 5 coming down into the 1672 area through here. I also need to point out too that because we've got if this occurs, then this would be just wave 1 here, wave 2 here, and all of this would be wave 3, which would actually move a bit quicker than this wave structure here, because if it was a corrective move like an A wave here, then it would move quite quickly here, and then the C wave would move slower. In a bear market, the wave 3 here will move quicker than the wave 1 here. So we would be looking at a larger 5-wave structure to the downside through here. So, you know, just another 5 waves really. So the 1, the 2, the 3 down to here, the 4, and then the 5 down through to there. The 5-minute chart here for the S&P 500, you can quite clearly see from the low here, the 1, the 2, the 3, the 4, and then the 5 moving up through here, which would be the 1, the 2, the 3, the A, B, C for the 4 and the 5. So we should see a top, you know, coming in here somewhere, and then the A, B, C correction for this unfolding out through this particular level through here. The A, the B, and the C here, but we want to see this on the cash market, not so much the futures. So obviously the futures will be trading today through the Australian time zone, but we want to have a good look at this in the cash market. So this wave structure here should be the same length as this one here coming through here, but once again it depends on how much supply and orders and so forth are up here. So anywhere from 1695, 1698 would be the resistance area in there, and that's where we'd be looking for the short trades there. Okay, right, I was going to go straight to the Australian market from here, and the Australian market you know, we knew it was a little bit weaker because of the BHP, but also Commonwealth Bank too never got over the 73.50, and it should find some sort of support at 72 there. But the structure coming down through here so far is that, well, let's just go over this a little bit and look at all the possibilities here. So from here we can see the 1, the 2, nice strong 3rd wave here, the 4th wave and the 5th wave. Here we can see a little 5 waves here, a bit like the S&P 500. So we'll be looking at this as an A and a B and a C wave here. This structure is a little bit different here. It's very much like the DAX or the FTSE, and yes, this move down here could be this is a bit tricky to read through here, okay? So I've just taken the low point and the high point here for wave 1 and wave 2 here, but this could just be the third wave here, the fourth wave to here, the fifth wave to here, and then we get the ABC correction from that point there. So, excuse me. So an A and a B and a C wave, something like this here, and then moving down from that point there. So a little bit different from the S&P 500 and the Dow Jones, but more like the DAX and the S&P 500 here. So the other point, though, in case I'm wrong, would be that we have three waves down here. We have the wave 1 here, which we could call the A wave, the B wave, and the C wave here. And that could be just a corrective move, but we wouldn't go long unless we had a nice solid support on top of top of group 1 here, the 50-30. At that point there, we could start looking at it from there. And the reason for the catalyst today for this to move up through here would be the metal markets, as they were a bit positive. If I got this on a smaller chart here, I mean, this just anyway. There's a little 5 waves, just like the US 30 in there as well. But just want to point out too that if this 5,000 becomes the resistance, and if we do get the 5 wave structure here, the 1, the 2, the 3, the 4, and the 5 here, then we're going to get an A and a B and a C here. If this next wave that comes down here is sharp, then we could end up with a quite a large move, because this, if I just go back to just bear with me while I just get the XJO up here for a moment. So yes, it's possible that we can have this as just bear with me here for a second. So we know that we've got this up for 1 here, we've got this back for 2 here, and then we know that we've got a 5 wave structure up through here, which is this little structure here. So we've got this little wave 1 to here, wave 2 to here. The wave 3 here is into that point there, the wave 4 to here. And as you know, we've been looking for that wave 5 to come up here, and you know that it was pretty dodgy and all the rest of it in terms of in its structure, and I couldn't figure it out. But the other point is that this structure as it stands so far, it can come back to, this is the wave 4 of 1 lesser degree here, the 49.50. Okay, so this can be a wave 4 that comes back into here, and it would be in 3 waves. So currently we're looking at this first leg down, which would be in 5 waves, then the 3 waves, and then this structure here. So that could be the case, and then we'd get a move up from there, and that would give us 5 waves up. And if we had 5 waves up through here, then we would simply get a ABC correction again from here, and then we'll get another 5 waves up. Okay, that's how that would pan out. But if that's not the case, and it very well may not be, then we've got a more of a bearish picture unfolding, because we would have to be looking at this structure here as the A wave down to here, the B wave back up to here, because remember that we were looking for our 61.8 retracement level, which was here, and and it has gone higher than that, but it still doesn't make any difference. It's the textbook and what happens in reality don't always face up to each other. So what we do need to be aware of is this situation here as a larger A, B, and C across the 5,000 here, and if that's the case, then we'd be looking for a larger 5 wave pattern like this here. So this particular move down through here, we've got a bit of time, because what happens is that just clean this up here. this 5-wave structure here will have 5 waves in it, okay, and this is what we need to work out in due course. So we've got that 5 waves there, and that would be followed by a counter trend here, and then another 5 down through here. So that would be our major short. If we got 5 waves here, then we'll definitely be looking to short from this ABC correction from here to catch this 3rd wave down. But in the meantime, we've got this move down through here, which we need to work out if we get 5 waves to start with. So yeah, let's just see how we go. We'd need 5,000 as the retested resistance, and we would need to see clear 5 waves down, 3 waves back up, and then take it from there. But we don't know even if we've got that here just yet. So we still need to work through this first 3 waves or 5 waves through here. But yeah, looking at today as such, I'll just see if I've got a smaller chart. Okay, so yep, okay, so this is cash. So you can quite clearly see that that from the low down here, we've got this 1, 2, 3, 4, 5. Really nice Elliott structure, really. So this is the A wave, the B wave, and the C wave through here. So what we'll be looking at here today on this is so this is the 5 waves up for the A wave, or wave 1, then the A, the B, and the C wave here. So once that occurs, once we get that move above there and then checking down lower through here, and if we can get support on here, then you can get your little sort of long trade into here. But you can't go much further than the 50, 20, 50, 30. This is all the supply area coming in through here. And what we do need to work out in terms of the next sort of short trade really would be, if this is just going to be an A and a B and a C wave here, then we want to see overlapping wave structure with the top of this one here, preferably the top of this one here, actually, this little structure through here. So really you could probably glean a few short positions from up here, but at the end of the day, it would be safer if you've got this 5,000 as the short position there, and you can take that down to the 72 area through to here. But we're also expecting a bounce down here as well, a larger bounce. So consider this the 4th wave, and we're looking for 5 waves down here as the 5th wave to complete that, and then we're looking for a bounce from that point there. So look, pretty choppy price action within here. Yeah, so just be careful about that. Alrighty, let's have a look at, just before we go actually, just have a look at CBA through here as well. So with CBA, we've had that sharp move down from the political announcements. They've all got to chip into the pot, so to speak. But this, as it stands at the moment, is in 3 waves here. So it is an A and a B and a C correction through here. It's not that it's finished yet, because this would be the 3rd wave down through here. So it'd have a 4th and a 5th here. But if this develops into a larger 5 waves down, then you're going to need to do something about your banking shares as well. So the 1, the 2, the 3, the 4, and the 5. So if we get that, you can wait for the counter trend after that to clear, any sort of longer term trades out, or you can do it now and just wait. And if we move above the 73 or 73.50 as support, then we're going long from that point there. So this is a time to act, I guess. So you can always get back in, that's the thing. Right, commodities. Okay, starting with gold, and we're looking for a bounce off the 1272, and that's coming into play. And we're looking at the bounce as a and a B and a C as a retest of, somewhere up here of this trend line and 1300 and so forth. Should do it in the little A, B, and C here in terms of 3 waves, and it should be 5 waves, 3 waves, and 5 waves, and then one more to the downside. So that's what we're looking for there. The oil market is a little bit the same as well. Of course, we've got a nice trend channel here on the 15-minute chart for this market. The move that's coming down through here is it appears to be corrective in nature, so that means that we should be seeing further upside with this in due course. The other thing too here is that on this, we're looking for a bounce on the 104.50. It's moved a little bit low onto this trend channel support here, closer to the 104. We should see some support here that will come in from the stock market. So just be aware of that. But as you can see, the trend is still down. You're just going to get a short-term bounce from here. The copper market is quite supportive, really, when we look at it. Yesterday, we were sort of looking at wave 1 here, and we're looking at wave 2 to move back. Now, that wave 2 could be into place here, or we just may have the A wave in here. So I'm not quite sure. So that would read as the A, B, C is either in through here, or we've already got, this is it here, the A, the B coming up here now, and the C moving to here, and then moving up from that point, or we're moving straight up from here. Both are quite sort of valid. When I have a look at that intraday through here, as such, we do have a little sort of 5-wave structure to the downside, or to an ABC to the downside through here. So I'm just not sure if this is it here, actually, the wave 2 to here, and we're going to be pushing up higher from here. Of course, we can see that this is getting quite tired towards here, so we could end up seeing the situation as follows. We'd see this as if this is completed here, then we'll see this is up here. We'll see some sort of move back to here, and then a move higher from here. If that's not the case, and this is just the B wave up here, so an A, B, and C wave down to here, and then up from here, and this would be in 5 waves if that was going to be the case to here as a C wave through here. The Australian BHP has corrected as we sort of figured it would do in terms of the classic trading levels pattern across the 35 here. So the arrival, the reaction, the first high above the level, and then we should see the A, the B, and the C correction come into play here before we see any further support here. So to get the timing right, this is what we're looking for over here. The US BHP hasn't really moved that much as such. So this is we've had this here for quite some time, as you know, and it seems quite corrective in here. We just need to allow it to unfold a bit further. But as soon as we can see some strength in the general market, we can go in and buy this. But this corrective process is still unfolding here. That circle is just the 61.8 retracement level from here, but also looking at the medium level here, 65 here, really pegging that. And the orange line here is not a 72 number, it's just the 618 in terms of price, $61.80. Normally comes in quite handy using those numbers in terms of ratio, in terms of price. The corn market that we've been sort of tracking, I can say that it's going to get, while the markets doesn't have 72 as support, then you hold short, and that's as simple as it gets in trading terms. In Elliott terms, I thought we may have had, and it still may be the case, I thought we may have had this bottom of this third wave in here with a little fourth and a fifth wave in through here as such, and all that sort of tucked in there. But I don't know, it seems to count better in terms of coming down here for the 1, the 2, the third wave with 5 little waves in it through here, 4 to 5 to here. I don't know if this is an A and a B and a C here. I'm not really quite sure about it. But if we do get a new low through here, just be mindful that, it's the same sort of story. If you would exit the trade if that the breakout's not important. It is important as part of the process, but it's not everything. So if it breaks out through here, it's the retest that's more important. So if that became a situation like that there, well, then you would exit once that's been a tested support there, and then we'd look for a rally back up through here. But while it's just poking its head up through here, it doesn't mean that much, but it can do it from here as such. Okay, that's what would sort of be looking at through from here. So yeah, just need to allow it to play out. But as I mentioned, in trading terms, unless that becomes the support there, then you need to continue to hold short there. Yeah, and this is also going to get really messy here too. So in terms of trading this market here, while it's doing this wave 4 business here of 2 degrees here, then it's best to leave that alone. In Elliott terms, we don't trade fourth waves because they've got overlapping wave structures and they get very messy. Okay, starting with the US dollar here, the lower price range here around the 81 is on the cards, but we're entering group 2 here, group 1 rather, so the 10, the 20 and the 30, so you can expect choppy price action from here. And this is going to reflect back in the euro as well, so we can expect a bounce off here and then a move down lower in through here, but it's going to be choppy through here, and this is going to reflect back into the euro. Looking at the euro here, even though it is pushing high, and we expect new highs to be made above this one here if it hasn't already, further up through here, but like I said, it's a bit of choppy price action. The other key points here are that the 133 here is the top of subgroup 1, so the 1, 2 and the 3 here. And you can see that it has moved above here, but this is kind of like the classic trading levels pattern where you've got the arrival, the reaction, and then the first high above the level, and it's the same here as well, the arrival, the reaction, and the first high. So we can get it coming back here as well. So just zooming in on that a little bit, we do have a positive wave structure for this market here, in terms of we've got a 5-wave structure up to here and coming back here, and then we've got this 5-wave structure here coming back through here. Yes, it could be a B wave, but once it takes this wave out here, the higher this out, then it becomes a bit more more positive to the upside through here. So yeah, just sort of looking at that. So this 133 here is the top of subgroup 1 here. So the reason when it separates from this would be at the next degree smaller at the micro level here. So 33, 10, 20 and 30. So it's at 37 at the moment, but that doesn't matter. Let's go even smaller here. When this is the 10, 20 and 30 here, we need that support there. It's tested it once here, but I always like to see a bit of a correctional pattern here first. But the fact that it has tested it once here is a good thing. So it's had the arrival, the reaction, the first high above the level, then the retest here. So it can push high, but I wouldn't be surprised if it comes out. It's only if the pivot here, the 20, becomes the retested resistance here, that would we be getting more downside here. So this move here is corrective. This is positive to here, so this is like 1 and 2 here. So it is working higher in an impulse wave up through here, getting a bit tired up here. So you can expect, this is the support here, the pivot. So you need to keep stops under that. But besides that, it's still to the upside there. The Australian market has got a shorting opportunity coming up here shortly. So basically we're looking for, this is wave 3 down here, as you know, we're looking for wave 4 at 38.2%, or the wave 4 1 lesser degree, which is there, or the 90 through here, the major trading level 90 through here. So this A, B and C wave here. This C wave here should have 5 waves in it, and it's just not quite there yet. We're at the top of the 3rd there. So once that occurs, then we'll be looking down for wave 1, probably the bounce off wave 2 off the 90 here, and then working down here for wave 3 and 4 and 5, making new lows here for the last impulse wave to the downside. So we really need this to toy around with this 90 here first, and then in its own way you'll need to find it. That's always a nice little setup to enter short there. So with that in mind, we're looking at this. I mean, what we were looking for yesterday, we were looking for an impulse wave up through here, but we didn't get it. And this wave 4, we're looking for a wave 4 here, but it's just come down. It's overlapped this a lot here, so it counts better, and the look and the feel of it's better if it counts from an A wave to here, and that would be 5 waves up to this point here, as an A and a B and a C to here, then the A, the B and the C to here, and then wave C has always got 5 waves in it, so we're looking for 1, 2, 3, 4 and 5 to here to complete that, and then move down from there. Now we need to be even though that this is the Elliott count, we also need to be mindful of everything else. We don't want to put blinkers on. So in terms of trading, this can also be viewed as the classic trading levels pattern, where it comes up to here, has the arrival, the reaction, finding support, and the first high above the level, then the A, the B and the C here, and then moving up from that point there. So we need to be mindful of that. We also need to be mindful of this little level through here as well, which is the top of subgroup 1, so 90, 10, 20 and 30. So support found on here would take us higher from there, so just be mindful of that. But as it stands, just zoom in here a little bit further, we're looking at this being wave 1 here, an A and a B and a C for an expanded flat here, and then 1, 2, 3, 4, somewhere in there, 5 for the wave 3 here, wave 4 pulling back to the wave 4, the wave 4 of 1 lesser degree, or 38.2. It hasn't quite got there, may not get there, may get there. It might be just the A wave, the B wave and the C wave here, and not that it matters. And then the wave 5 up here, just taking the top of this out here into the 90-20 here. It shouldn't be a long wave up here unless it's really expanding, because normally if the extension's in wave 3, well then wave 1 here, wave 5 will be about the same. So in terms of trading, then a short under the 89.72 would be helpful if it doesn't make a new high here. If it finds support on the 90.30, then something's amiss, and it will be going high from that way, and it'll just, the whole thing's expanding to the upside, because that's something we need to look at as well. Sorry about that. Because this is expanding. This this trend is big, this correction is big, so in an odd way it is growing, it's expanding, so we just need to be mindful of that. But in terms of Elliott, everything's going according to the plan. We should see another high up here, and then it should work itself lower. So a good trading opportunity on the short side. You just need that 90 as support. Of course, you can short it up here, but I wouldn't overdo it. I'd just use it to build up build up the trade, get a few contracts under your sleeve. So once that becomes a retested resistance there, but you are trading against the trend there, and I don't know, doesn't really get probability on your side, so to speak. So. Yeah, alrighty, well that's it. So good morning, good luck, and enjoy the day ahead.